As of this moment, Denison Mines Corp is trading at $2.83 per share, experiencing a slight intraday pullback of 0.88%. Now, on the surface, this looks like typical market noise, a small dip in a volatile sector. But what if this small fluctuation is actually a symptom of a much larger, unspoken tension brewing beneath the surface of this uranium darling? The common story you hear everywhere is that Denison is a premier play on the nuclear energy resurgence, perfectly positioned in the world's best uranium jurisdiction. The expectation is a straightforward ride up as the uranium price climbs. The reality, however, is that Denison's entire future valuation is precariously balanced on a single, high-stakes technological gamble, and the market might be starting to unconsciously price in the immense execution risk that comes with it. This isn't just about the price of uranium, it's about pioneering a new frontier in mining, and the path is far from guaranteed. Let's first address the narrative that has drawn so many investors into this name, from those using sophisticated interactive brokers platforms to those just starting their online investing through the Robinhood app. The belief is simple. Nuclear power is making a massive comeback as the world seeks clean, reliable baseload energy. This creates a structural deficit for uranium, the fuel for these reactors. Denison, with its flagship Wheeler River project in Canada's Athabasca Basin, the Saudi Arabia of uranium, sits on one of the highest-grade undeveloped deposits on the planet. The Phoenix deposit specifically is a geological marvel. The expectation is that as utilities scramble to secure long-term supply, they will inevitably turn to developers like Denison, sending the stock price soaring. Many who are looking for investment help see this as a clear, logical path to growth, a stark contrast to the saturated markets of names like Nvidia stock or Apple stock. But this clean narrative overlooks the messy, complicated reality of bringing a deposit like Phoenix into production. The challenge isn't finding the uranium, it's getting it out of the ground in a way that is economically and technically viable. Looking at the recent stock movement, the price action tells a story of this underlying conflict. The stock has seen significant upward momentum over the past year, but it has also been characterized by sharp pullbacks and periods of consolidation. The trading volume on down days like today needs careful observation. Is it light, suggesting minor profit-taking, or is it heavy, indicating that larger players, perhaps those using Fidelity brokerage services for institutional trades, are trimming their positions? This is a critical distinction. An individual brokerage account holder needs to understand that not all price dips are created equal. The stock's performance is tightly correlated with the uranium spot price, but it also reacts with heightened sensitivity to company-specific news regarding its technical progress. This is a stock that can swing dramatically on a single press release about drilling results or pilot project updates, something that long-term investors using Schwab Intelligent Portfolios for diversification might find unsettling. When you're managing your own portfolio through SoFi Invest, you have to differentiate between sector-wide sentiment and company-specific risk, and with Denison, the latter is arguably the more dominant factor right now. So, what exactly does Denison Mines do? The company isn't currently a producer. It's a developer. Its primary focus is on advancing the Wheeler River project, which it holds a 95% interest in. This project is comprised of two key deposits, Phoenix and Griffin. Griffin is a more conventional proposed underground mine, but Phoenix is the asset that truly defines the company's potential. Here, Denison plans to use a method called In-Situ Recovery, or ISR. This involves injecting a solution underground to dissolve the uranium and then pumping it to the surface for processing. It's significantly cheaper and has a much smaller environmental footprint than traditional open pit or underground mining. The problem: ISR has never been successfully used on a deposit with the ultra-high-grade characteristics found at Phoenix in the Athabasca Basin. The expectation is that they will crack the code, leading to astoundingly low production costs. The reality is they are navigating uncharted geological and engineering territory. Every field test, every metallurgical report is a step into the unknown. Their success hinges on their ability to control the flow of the mining solution in a complex geological setting, a task fraught with technical risk. For those accustomed to the more predictable business models of companies whose shares you can buy via Robinhood stock trading, Denison's model is a high-stakes research and development project as much as it is a mining venture. This is the kind of detail that separates a casual investment from a deeply researched one, something you learn when you move from simple investing sites to more robust platforms. Comment below what you think the biggest risk is for Denison's Wheeler River project: permitting, technical execution, or the uranium spot price. Looking ahead, the path for Denison is a series of critical de-risking events. The future outlook is a binary landscape of massive success or significant setbacks. On the positive side, catalysts are clear and potent. A final investment decision on the Phoenix project would be a monumental step. The successful completion of their feasibility study and securing all necessary environmental permits would remove major hurdles. Perhaps the most significant catalyst would be the announcement of one or more long-term offtake agreements with major utilities. This would serve as a powerful third-party validation of their project's viability and help secure project financing. A continued rise in the uranium spot price, driven by geopolitical instability and the ongoing energy transition, provides a powerful tailwind. This is the scenario that has investors using the Fidelity mobile app to check their positions with excitement. On the other hand, the risks are just as substantial. A major technical failure during the final phases of testing the ISR method could lead to significant delays and cost overruns, severely damaging investor confidence. Any unexpected difficulty in securing permits could shelve the project for years. Furthermore, while the company is well capitalized for now, developing a mine of this scale is incredibly expensive, and securing the final project financing in a volatile market is never a given. The reality is that the road to production is long, and any number of obstacles could appear. Investors who have diversified through Fidelity ETFs or Fidelity mutual funds understand the importance of mitigating such single-stock risk. For those engaging in SoFi active investing, Denison represents a calculated risk that requires constant monitoring. In conclusion, the story of Denison Mines is a classic case of expectation versus reality. The expectation is that of a world-class uranium asset in a bull market, a seemingly straightforward path to becoming a key supplier for the future of energy. This narrative is compelling and has attracted significant investment. The reality is that Denison is a technology company as much as it is a mining company, betting its future on the successful application of a novel extraction method in a uniquely challenging environment. The current price of $2.83 reflects both the immense promise and the profound risk. The slight dip today isn't just noise, it's a reminder that the market is constantly weighing the beautiful story of future demand against the gritty reality of engineering challenges and execution risk. It's not about whether you use Fidelity Investments or SoFi stocks. It's about recognizing that the true value of your investment isn't just tied to the uranium spot price, but to the drills, pumps, and geological data that will ultimately determine if Phoenix can move from a world-class deposit to a world-class mine. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. Don't forget to like, comment, and share. Subscribe for more finance updates and market insights. This is for education and entertainment only. Invest at your own risk. Like, comment, follow for more finance.